Good morning. I see more attendees are coming in. Welcome to our Six Capitals webinar this morning, part one of a two-part series. We will be talking about reporting in the post-pandemic era and the value proposition of that. And we have some wonderful speakers in this series who will be sharing their practical experiences. Please feel free to post your questions at any time during the presentations in the Q&A box that you will see on the left-hand side. Also, if you have any technical issues, Adolf will be able to assist you. Please just post your question in the Q&A box. I think we are almost ready to kick off. We only have an hour, so we don't want to overrun with your time, even though it's Friday. We don't know what you have planned, but certainly we hope that you will find this a relaxing and informative hour. What we have done is throughout the sessions we've created some polls just for our attendees to answer, indicate your views, and for you to be able to participate in the sessions beyond just the Q&A. So Adolf will be launching some of those polls during the course of the presentations. Please do look out for them and give us your perspectives. I think then we are probably ready to start. Our attendee list has grown quite significantly. So I think let us kick off. I've said welcome quite a few times. Yes.
Yeah, Corley, sorry to interject. Just on a practical view, your video is shared, and thank you very much. Luckily, it's yours and not mine. It just comes over most of the attendees' slides, so they can minimize it. However, I think it'll just be more practical if you can close your video for now. It's a pity that we won't see you then, but I think it will be more practical if you can just close that, and then
okay.
that's
I have switched it off. Is it okay, off now?
It should be. Well, I think maybe Rudolf will be able to answer that question for us because he's on the attendee list and he will be able to see on that side. I just saw that on a.
Yeah, I've Corley's video has just been turned off, Adolf, so we can see the slides on this side.
Right, thank you. Over to you guys.
Okay, good morning, everyone. Just a quick snapshot of our agenda for the morning. Let me just see if the presentation will participate. There we go. This is the agenda for this morning. I will be sharing just some general thoughts about the value proposition for reporting. And then we will have Sarah Jane from INS expert perspective in terms of what they are seeing around what to expect from reporting going forward. And then we will have a practical perspective from a reporter, Isha Mansingh from Imperial. I will introduce them again when each of them will speak, but just for you to see what they look like, the pretty faces behind the voices that you will hear. We've tried to schedule these presentations in a way that will give you an industry expert perspective from a broader view of what they're likely to expect from reporting going forward, and then a practical perspective from the coalface of someone who is preparing a report. And next week we will also hear from Justin Smith from the WWF in terms of users of reports. So that will give you some different sides of the debate. But before we kick off with that, I would like to introduce Rudolf Fourie, who is, as I mentioned earlier, a director of Alternative Prosperity and co-founder of Six Capitals Advisory. And he will just give us a brief introduction into Six Capitals for those of you on the webinar who may not be familiar with the team and the service offering. Over to you, Rudolf.
Thank you, Corley. Yeah, if you can just move to the next slide, please. Great. Sorry, I see I can do it from my side. So Six Capitals is part of the Alternative Prosperity Group. Our group consists of 4 businesses, one which focuses on transformation and BEE, Then we've got Six Capitals, which is essentially a ESG advisory business, and also it also includes corporate sustainability. And then we've got a stake in DNA Economics, which is a development house, and they also do a lot of monitoring and evaluation, which is, I think, is very relevant to reporting going forward to kind of make it meaningful. So yeah, so as part of this group, Six Capitals focuses very much on institutional investors and companies, and like I said, it's got a variety of services. So if we move to the next slide, the things that we actually focus on, just broadly, I can group into 4 areas. So we've got ESG and impact advisory, which will assist asset owners and asset managers and the likes to really build out their frameworks and their strategies around integrating ESG into their business. Then we also focus on development finance advisories. So that would typically be solving the problem of how do we move money and finance from surplus assets in the economy to deficit assets in the economy. And I think what our dream is really there is to be a trusted intermediary to make sure that money moves smartly to places that can bring about development. Then we also have a financial education part that focuses on trustee and employee education, and there we've worked with organized labor for quite a long time to make sure that the worker representatives of trustee or retirement funds are really educated and can make smart decisions around everybody's savings. So what we're talking about today is really our research and reporting part of our business. And I think the dream there, as you can see, it's about advisory on reporting, but it's also about research. But I think essentially for me, it's about telling authentic stories. Just a bit of background, I did my my thesis on sustainability reporting back in 2007, and they didn't really want me to do it in an accounting department where I lectured at that stage because they said it wasn't relevant. And I think today we know that the stories that companies and organizations need to tell is very much about the non-financial plus the financial. So I think our focus is not necessarily on writing the final report, but making sure that what goes into that report is meaningful, so that you use the right indicators, you measure properly, and then you turn those stories into something that really has substance. So I hope today will build on that dream for us. And then just lastly, on the next slide is the team. So Adrian's on leave, well-deserved one. It's myself and Melanie Smith, which you'll also hear from today. And then Lisa and Corley, both based up in Joburg. And then Sifaku and Kolofelu. Sifaku's more now on our media side, and Kolofelu is an intern that started with us. So yeah, you'll hear some of the voices today, and Adrian you'll meet next week. Yeah, and then I just want to thank Melanie and Corley for all the effort that they've put into getting these webinars going. Cool. So that's me, and that's Six Capitals. So welcome and enjoy the time with us.
Thank you very much, Rudolph. It's lovely to have you with us this morning, and thank you for that overview. Right, I'm going to then kick off straight into the first presentation, just to give you some general thoughts on the value proposition for reporting. And as I mentioned, then we will get practical insights from our other speakers on how the current situation and crisis is affecting their reporting. Just to start off, just to put the session in context, you will all be familiar with the famous octopus that is used in the context of integrated reporting. What we are talking about this morning is not integrated reporting or sustainability reporting or financial reporting per se. What we're talking about this morning is how you disclose to stakeholders, whether it be in the integrated report or the sustainability report, with the assumption, though, that sustainability and ESG disclosure is part of what is being disclosed. We'd like to delve into the value proposition of disclosure across the entire reporting suite. So just to put that in context, when you then look at the value proposition of reporting, you often ask companies and reporting organizations, what is the value proposition for them? What are the perceptions around reporting? Do you see tick boxes and overloading with paper and just big boardrooms full of meetings and discussing what needs to go into the report and how we try to tell a coherent message? And when you work with frameworks, are you overwhelmed with the alphabet soup of frameworks that is coming your way? And they're essentially all giving you different directions. I hope I never have to encounter a traffic light like this anywhere in the world. There's also quite a perception, I think, that the value proposition of reporting doesn't exist because nobody reads it and everything you work so hard on just disappears into a black hole. We often, when dealing with companies, come across this, and a lot of companies then see reporting as either a response to a stakeholder requirement, such as a regulation or a demand for information, but without delving deeper into what the story is that they need to tell and what the value proposition is. So the question is, who is the value proposition for? And I think it's important to understand that there's a value proposition both for the users, who are the primary audience of the reporting suite, but also there's a value proposition for the reporting entity itself. And I'd like to just give a brief overview of both of those perspectives this morning. When you look at the reporting entity itself, it's very clear from research and various conversations with companies that the value proposition for the reporting entity itself falls across a number of areas. And the three that I'd like to highlight this morning comes across your risk management and operations, the reputation and relationship management, as well as how it assists in the performance and impact of the organization. Unpacking each of these three, when you look at risk management and operations, when you consider disclosure, it's often said that reporting is the tail that wags the dog, and that reporting should be the end of the process rather than the start. But still, we find that the value proposition for a reporting entity is that it does enable you to better predict and manage certain relevant risks that you are reporting on. It helps you identify the material issues in a more comprehensive way, and this presents not only improved processes across your data collection, decision making, and streamlining, but also reduces the allocation of risk across various categories. Empowering of employees is another critical operational value proposition that companies get. You are able, throughout the reporting suite, to give employees across functions the ability to speak the same language, which is very important in building a value proposition for the retention of your staff. Reporting also plays a very important role in increasing the quality of governance within an organization. And if you manage it properly, it can really result in real cost savings if your operations are managed according to the risk. Reputation and relationship is often a value proposition that many companies see above some of the other value proposition elements. The external recognition through awards and other index inclusion and so on is certainly something that cannot be disregarded in the value proposition for reporting. Brand attractiveness and competitive differentiation is a key purpose that companies often strive for in reporting. But I think the core here that one needs to look at is the enhancement of your trust with stakeholders and the confidence that your customers can gain from being sure that the report that they read is giving them a full and proper picture. Because that supports the social license to operate for the organization, and it enhances the engagement with your clients and your investors. Lastly, in terms of the value proposition for the reporting entity itself, and this is becoming an increasingly stronger focus area, There is increased studies, and I've just given examples of 3 here that go back some time, that research is increasingly demonstrating that financial performance is supported by the integration of ESG issues into reporting and by quality, sustainability and integrated reporting. Just recently, I was reading an article about how governance is still being demonstrated as a definite value proposition that can enhance financial performance, but a lot of this is reliant on quality reporting from the organization. And the rigor of the reporting process matters a great deal. So that takes you back to the first point that I was making around ensuring that the processes and the data collection is considered as important. Increasingly, impact reporting is growing around demonstrating social and environmental impacts and demonstrating your measurement around that. And reporting also enables you to demonstrate enhanced services and products that are being offered by the organization. The challenges that companies are experiencing across organizations is that framework selection, the traffic light that we were looking at in the beginning, availability and accuracy and completeness of the data, where you almost have a puzzle that doesn't present a complete picture. A key consideration is the leadership and the buy-in. What I think is important here is to ensure that there is buy-in from the leadership and to use the 3 elements of the value proposition for the organization to motivate why it's important to disclose in a quality manner. Resources, I think, is a big challenge that companies are particularly dealing with now, and that will require some innovation from them to see how they will make sure that the quality of the reporting will not be affected. Often in private organizations, there's a lack of demand from users for the data, and they consider the information to be proprietary, as opposed to a listed company, for example, that is required to report on things. And then obviously there's also the issue of the supply chain and just gathering data from large organizations. Very quickly looking at the value proposition for users, and just as a reminder, when you are preparing a report, it's important to balance the value proposition for the organization with the value proposition for the users, and to drive your reporting in a manner that will optimize the value proposition in both directions. For the users, what they are looking for, and particularly this is focused on investors, they're looking for a report that gives balance and context in the way that the data is represented, positive and negative, that there's clear connection to strategy and risk, and some trend data as well for comparability. Clarity is an important thing in reporting. This can, and I'm sure Sarah Jane will touch on some of this, it needs to be easy to navigate the report with not too complicated narratives, even in an area that is filled with technical jargon. One needs to be able to demonstrate that you can communicate in a way that readers can understand how you are interpreting the facts. One of the integrated reporting principles around conciseness is to get to the nub of the issue immediately and ensure that there is proper coverage of all of the material issues. And finally, credibility is then built up through clarity on the oversight and ethical and accountable treatment of the report. And together, these elements will offer a value proposition for the users that are reading the report. Because what we're seeing increasingly is where reporting used to focus just on the tip of the iceberg, users are now wanting to delve deeper and want to understand what lies beyond the surface of the organization and what is going on at the different levels within the organization, so that they're able to form a clearer picture. This is just some quotes from a report on disclosure by Series, which really demonstrates that value proposition for investors. They're looking for relevant and reliable information, more than anecdotes and success stories. They're looking for decision useful information, particularly increasingly around sustainability. and we are looking for maturity of disclosure systems. Those of you who have been following the research from Black Sun will be able to look at the recent reports there in terms of how the disclosure systems are starting to mature around ESG disclosure. And then finally, what the ultimate value proposition is for a lot of companies, that investors will start to price investments according to the sustainable value proposition of a business. Wrapping up then, what do you do when crisis strikes? And this is what we really want to delve into. If you keep in the back of your mind the three elements of the value proposition for the organization and the four elements of the value proposition for the users, what does a company then do when your entire planning for the year and the roadmap that you've set out for yourself is derailed by a crisis such as the one that we are seeing now? And this is where Esha and Sarah Jane, and next week Justin and Douglas will give us their insights from the coalface. But to wrap up from my perspective, the important thing is to stay the course, but increase the focus. You need to demonstrate a strategic and integrated response. Do not veer away from setting a clear strategy with well-defined risks and opportunities, and this will be even more important in a post-crisis environment. The material issues that will need to be distilled and managed will become very important, and there is a reconsideration, I think, probably that a lot of companies will be doing around material issues. Governance, I think if anything, a crisis exposes your shortcomings in governance, the awareness and understanding of your leadership, and the quality of data management and proper controls to be able to respond, not only to the crisis in a practical operational perspective, but in how you disclose your response to stakeholders. And at the core of this integrated thinking is what will give companies the resilience to be able to come through this in a way that will not destroy the credibility that reporting has built up to date. Better disclosure will enable better discussion, which leads to better decisions. That is the core of what organizations need to bear in mind. So that is the brief perspective from my side of what the value proposition for the organization and its users are. I'm going to ask Adolf at this stage to launch the first poll. We have a few questions there from your perspective around how you see reporting and the responses that are likely to happen. And then I'm also, while you are answering the poll, I will look at the Q&A to see if there are questions that I can respond to at this stage.
Corley, yes, thank you. And the poll is up, and I can just read it. Given the severe impact of the availability of resources as a result of the pandemic, is corporate reporting still relevant? We would like to have your view on that. And I see there's quite a couple of votes coming in. And I will reveal the results of this in a moment.
Yes, not surprisingly, we are seeing that everybody so far is saying that corporate reporting is more relevant more relevant than before even. So that I think is what one would like to see, is that the importance of disclosing and being transparent in a time of crisis is understood and managed.
Right, Corley, I'm not sure would you like me to launch the next poll?
Yes, please go ahead.
Right, and the next one says, do you think stakeholders will expect increased disclosure as a result of the pandemic? There's a couple of differences in opinions. The votes are coming in. And everybody should see the results of the votes coming in right now. Corley, you should see that as well.
Yes, it's interesting. We do have some attendees who don't necessarily think that stakeholders will expect increased disclosure. I guess it depends on the priorities of the stakeholders and whether the relationship with the stakeholder is shifting as well. Some don't know. It's a little bit of a wait and see, I think, in some respects. Okay, Adolf, I think if you can skip the next question and just launch the number 4, the question about investors. Or we can, yeah, that one. We will wrap up with that one.
So it says, do you think that investors are likely to pay more attention to ESG issues as a result of the pandemic?
Okay, we see some real diversion here, mostly yes, but we do see some who are saying no, or they're not sure. Yeah, I think it's an interesting environment that we're entering. It will be very useful to see how investors are going to be responding to this. Wonderful. Okay, I don't see any questions in the Q&A at this stage. So I'm going to move on to our next presenter in the interests of time. So please, again, if you have any questions for our presenters, please post them using the Q&A box in the left-hand side. And I'm going to hand you over to Isha Mansingh from Imperial, who will share with us how Imperial, who are right now in the middle of preparing their integrated report for the financial year, how are they dealing with their response to the pandemic. Isha, over to you.
Isha, you should be able to share your presentation to us all now.
Others, is it, just let me know when it's on the screen.
There we go, it's on the screen, and you can go full screen, and then we'll have it as full screen.
Great,
Sure,
thanks, Adolf. Okay. Good morning, everyone, and thanks, Coralie, for the opportunity, and thanks for a very insightful overview about the value proposition of reporting. Whilst you were going through that, I just had to do a check in my head to make sure that as a preparer of the report, that we also have both a user value proposition as well as a business value proposition, and I think we have. So I'm going to run through a lot of our slides, which is what we've been considering as a business going into preparing our integrated report very shortly, and particularly around this pandemic that we're all faced with currently. And I think all of us know that we are in extraordinary times. And I would always like to say, and this is certainly Imperial's view, that in communicating with all our stakeholders during the time of COVID, every crisis always brings opportunity. And for us as a preparer of the report, we use it certainly as a tool to tell our story. So what we've actually found with ongoing interaction with a lot of our stakeholders, and also following a lot of other businesses in similar and more diverse industries to us globally, is that we've starting to see that companies that will be set apart in these extraordinary times of crisis are certainly those that have very effective and strong ongoing stakeholder relations, solid ESG practices, which you've spoken about, Coralie, because I think all our stakeholders want to know that those companies that had already started integrating proactive ESG practices into their businesses were certainly those, when crisis hits, well positioned to support all their stakeholders, countries, communities, and employees in this most critical time of need. So they weren't on the back foot. And then, of course, the key to it all, communicate, communicate, communicate. And again, I mean, these align very closely to a lot of the stakeholder expectations, and you spoke about it, Coralie. And what do we mean by communication? So certainly the integrated report, and for those of you that are still preparing sustainability reports, are probably one of the most effective ways in which you as a user or business or preparer can use to tell your very balanced and transparent story. Certainly what your stakeholders want from you, though, is in times of certainty, and we've seen it, in times of certainty, you may not know the full picture as a business. You may not be able to quantify the impact of the crisis. You may not be able to answer every single question around guidance, around outlook, around what it means for your business in the next 3 to 5 years. But what your stakeholders want is that they want to be kept informed. In the times of crisis and uncertainty that we've all been seeing, and this is certainly unprecedented more than before, what people want to know is they want clarity. They want direction. They want you to talk to them. And I know that for preparers of integrated reports, the integrated report is one tool, and it is a very tedious task for management to continuously communicate to its stakeholders. But to keep those channels going actually influences your story and your perception of your stakeholders on your business. I think it also gives them the sense of reassurance that management has a handle on what's going on, and they really are trying to position themselves for a business and a world post-COVID. So it has been taking up a lot of time and effort and attention for ongoing stakeholder communication in the last few months, especially when as a business, you are trying to focus on keeping your heads above water, but certainly something that will stand you in good stead and set the scene for when you get to the stage of preparing your integrated report. And just moving on, and I'm sure many preparers or businesses in engaging with your stakeholders, what are some of the things that they want to see? Effectively, they want to know that from a value creation perspective, which is why businesses exist, that the business is in resilience mode and not survival mode. Excuse me. And what would actually set them apart from this? Is the business considering things such as the impact of implications of working remotely? Has the business been positioned to make the shift when crisis hit? Of course, the big question, particularly from a financial investor perspective, what is the cost of COVID and what are the consequent other financial implications of the business? From a cash flow and liquidity perspective, will it lead to the company likely breaching its covenants? What impact does it have on your current gearing and debt levels? If you are dividend paying stock, will it impact your dividends and then fundamentally change your investment case as a business going forward? And then, of course, what does this all mean for the future and where the business is positioned in terms of delivering on its targets? And just remember, from a changes to guidance perspective, to Corley's point, it's no longer just about focusing on the short-term financial impact. Stakeholders are expecting you as a business to consider the triple bottom line and how all of this ultimately rolls into the future of the business. And then the big topic, what we've seen as Imperial and what it's really just emphasized through this whole crisis is, as a business, you cannot communicate a message or your positioning to your stakeholders and what you've been doing to remain resilient unless you as a business have been operating in an integrated manner. As Corley said right up front, reporting is a consequence or outcome of the way the business operates, and integrated thinking has really come to the fore, especially in times of crisis. And as a management team at Imperial, what we've been trying very hard to do, particularly in the last 3 months, is to continue and to deliberately focus time and effort on our longer term strategic planning while still trying very hard to make sure we navigate through the current crisis. What we've actually found is that we've embarked on a strategic journey about 12 months ago, and COVID has only just exacerbated or emphasized the need for change and transformation within our business. So to just pause now and only try to navigate the crisis will be an absolutely wrong decision. So we're trying to balance our time between strategic planning and short-term execution. And really for us, this is about adapting our business model and to be more agile in our decision-making and governance processes as well, and to make sure that our strategy and our business model are a lot more resilient to capture those opportunities in the world post-COVID. And we are seeing a lot of opportunities, particularly being in the logistics space and being the largest logistics player in South Africa and with a significant footprint in 32 countries. We are starting to see how clients, for example, are re-looking at their value chains and how the shift to more digital platforms and e-commerce, etc., is the way of the future rather than the traditional walls and wheels businesses. And thankfully for us, those were already big parts of our strategic planning process that we had already executed on 12 years ago. And had we only started that journey now, we would have found ourselves on the back foot and more in a survival mode than a resilient mode. And then the last point is really about proactively integrating ESG practices, which Coralie also spoke about. And for us, the fundamental shift in integrated thinking and how we position our strategy and consequent communication to our stakeholders is that our focus is on purpose. What is our purpose as a business? And the crisis has amplified our focus as a business on our purpose rather than profit. So it's really more about purpose trumping profit in a world going forward. I spoke a lot to some of our changes in our strategic approach in the previous slides, but I think the one point I need to touch on again is really integrated risk management. And COVID has certainly brought that to the forefront for a business of our size and scale. In the past, a lot of businesses have seen risk as a standard tick box approach, a bottom-up approach, and very operationally focused. And I think COVID has really forced us as business to look at risk management as an integrated part of our business, to make sure we always have business continuity plans in place, and to relook at the way we report on and position risk as a function within our business, that it focuses on a strategic level, a financial level, and an operational level, so that when a crisis such as this hits, we are well positioned with the right plans in place to capture the opportunities through solid risk management processes. The other fundamental shift, and I think this is a point that's relevant to all businesses, is new ways of working. And to make sure that technology is now integrated into our businesses. And for a lot of us, technology was a thing of the future. Accelerating both digital data and technology was really a thing of the future. But COVID has certainly pushed us to adapting to these new ways of working and integrating technology and digital into our workspace. And more our stakeholders want to understand how we're positioning ourselves as a business of the future. And then, of course, as Coralie said, my last point, greater emphasis on ongoing stakeholder engagement and proactive relationships. We spoke a lot about some of the new issues requiring focus, but certainly in our integrated report, COVID will be a material issue, and we'll get to that in the next slide. But really for us, it's again to explain very clearly to our stakeholders and our shareholders how we're seeing some of the new opportunities that are coming out of this crisis, what we've done as a business to position ourselves and to support our businesses, communities, and employees. Are there any potential downsides relating to our stakeholders that come from this? So such as retrenchments, etc. Are there different skill sets that we may require that we haven't thought about in the past? And then certainly the IT and the remote ways of working and whether we position for this as a business going forward. So what are we changing particularly in our upcoming integrated report and all our communication relating to stakeholders? So some of the big considerations for us is, will COVID be considered as a material issue? And not just for this particular year, but because we can't foresee how much longer this crisis will be impacting us going forward, certainly looking at the implications for the short, medium, and longer term of COVID as a material issue to all components of our business. And from an Imperial perspective, it absolutely is. And then looking at the 6 capitals, because for us, if it's defined as a material issue, it certainly has also been one of those crises that has impacted almost all of our various capitals. So we'll be very clear in terms of looking at our financial capital being the big one that the investors particularly are concerned about. How has COVID impacted our revenue, our cash positions, etc., and what this means for the future financial position of the business, very importantly. And of course, this financial capital will be closely linked to the regulatory requirements that the JSE requires in quantifying this as well. And then, of course, human capital. I mean, COVID's also brought to the fore how we treat our employees and putting the safety of our employees first, because if we don't, it has a major impact on our supply chains and our operations. So certainly bringing into the safety and wellness component and highlighting that, and then the new ways of working. We spoke a lot about talking to intellectual capital and how we position ourselves as businesses of the future, and particularly integrating digital innovation and technology into key components of our strategy going forward, and telling a clear story around that, and also prioritizing investment in these areas despite being in very tough financial situations currently. And then very importantly, social and relationship capital, a key consideration, talks very closely to sustainability and ESG, and very closely to purpose trumping profit. And that's the story we'll be telling as a logistics business. I mean, what we do is important to the livelihood of people by getting them medication and basic goods on time, supporting our governments with this in tough times, and to make sure that even in the world post-COVID, we continue to proactively invest in these. And then manufactured and natural capital also needs to be given the relevant level of focus. We spoke about regulatory requirements. I mean, that goes without saying in terms of what you put into your integrated report, and very importantly so, your integrated report from our perspective needs to give our stakeholder a view of our short-term, medium, and longer-term risks, the impact of COVID on the business through those three time frames, and the opportunities that we've managed to capture, and how will those be integrated into our business model and strategy and decision-making processes going forward. And then I think the last point on this is really about the outlook. And really, as Coralie said, a business exists to create, defend, and sustain value. And our story as Imperial this year is to be very balanced in terms of the impact of COVID on our business, and to give a very clear outlook and direction, even though we may not be able to financially quantify it, but to give a sense of direction on the resilience of the business and how we will continue to create value and position our business in a world post-COVID. So I think with that, Coralie, I'm not sure how I've done with time, but that brings me to the end of my considerations from an Imperial perspective on how we're going to be positioning our communication and integrated report this year. Adolf, we do have some polls in the section as well, which I will hand over to you to take us through.
Right, thank you. So yes, I'm going to start that first poll that was given to me, and the first question is: name an element of the strategic approach needed as a result of COVID-19. Is that the correct question for you?
Yes, correct.
All right, and I'll just wait for the votes. There's some votes coming in. I will make it available for everybody to see as soon as I've got a couple of votes coming in. And the four answers we've got there is maintaining the status quo, investment in short-term acquisitions, and then integrated risk management, which seems to be the favorite at the moment. And then the last one is reliance on traditional business model. And everybody should be able to see the result right now. We're running around higher 70% in the integrated risk management. Second in the row is reliance on the traditional business model. Can you see those?
I can absolutely see those, and I see integrated risk management is gradually increasing, and I think that's absolutely spot on. I think the fact that our mindset as businesses are to integrate risk going forward and not to see it as a standalone tick box approach has become even more critical and highlighted or emphasized through COVID. So definitely the firm favorite here. Do you want to move on to the second one, Adolf, which is the last one from my side?
There we go. We've got that one up, and it says, what reporting considerations were required as a result of COVID-19? And then there's 5 different possibilities to choose from. We'll just wait for, there we go. Some of the votes are coming in. You should be able to see the results there as they come in right now.
Yes. Some balanced views here. I mean, certainly COVID is a material issue, which as we've said, is likely key to be relevant for most businesses because of its impact across the business. And then certainly some, 37% that are saying all of the above. And now we're on par again. Great. Well, I'm looking forward to reading many other integrated reports, and certainly to Coralie's point, we are now at crunch time in our process, and And like I've started, I'm going to end by saying the same thing. In every crisis, there's an opportunity. So thanks for taking the time to join us from my side. And Coralie, thank you again to you and the team for including us.
Thank you, Ita. There is a question that we have from one of the attendees that I would like to get your thoughts on. The first part of that question is are we anticipating behavioral change from shareholders in what criteria they use to measure success, and are they showing an appetite for considering ESG performance outcomes? I think this is certainly a question that's relevant to all of our speakers, and we will address it in the panel as well. But maybe in 10 seconds you can give us your sense of whether your stakeholders are showing a shift in the criteria that they look at from your performance.
Yes, absolutely. I think more and more investors particularly are putting pressure on us to make sure we look at the business more holistically. Certainly with a lot of global and local investors, we are getting on a weekly basis ESG questionnaires to complete to make sure that they are comfortable that we are operating as a responsible corporate citizen. And in remuneration KPIs for management, this is exactly what our shareholders want to see. They don't just want to see financial KPIs, but they want to see components such as people, technology, and ESG incorporated into strategic KPIs for management. So in a nutshell, absolutely yes.
Wonderful, thank you. And with that, I'm going to hand over to Sarah Jane Wilkinson from INS, and she's the strategy manager at INS, and they deal with the spectrum of, Adolf, while you get her ready to share, INS, as many of you will be aware, deals with the spectrum across working with companies in preparing reports, but also in terms of managing investor relations solutions. And she's going to be giving us a broader perspective from an industry expert in terms of what they're seeing. Thank you, Sarah Jane. We look forward to hearing from you.
Sarah Jane, you'll be able to share your presentation with us. There you go. We can see it. You can just make it full screen and be ready to go. Yes.
Okay. Awesome. All right. Hi, everyone. I'm Sarah Jane. I work as a content strategist and reporting advisor at INS, as Corley said, and I'm their strategy manager. But I suppose what's really important for you to know is that I strongly believe in the power of good communications, and I'm passionate about the role that communication plays in building better businesses, better societies, better economies. And I suppose that's what really fuels my interest in integrated reporting and sustainability reporting. So I'm here to give you insights into the future of reporting, and I know I only have 10 minutes, so let's get straight to it. We'll kick things off by briefly taking a look at the past. So what has shaped our reports in the past, and what has been their focus up until recently? So for the most part, and this won't apply to the more advanced reporters out there, Esha, like yourself, but I certainly believe that it applies to the majority of other companies out there. So the focus was on the transition from traditional annual reports to integrated reports, the transition from King 3 to King 4, which translated into, for these two reasons, compliance-driven reporting and ticking boxes, and a more generalized approach to adopting the International Integrated Reporting Framework. So there was a lot more focus on past performance and achievements and CSR projects to talk sustainability. So in general, the focus has been on reporting and complying. But from what I can see, this is changing and slowly shifting. Companies are not really looking to report anymore, but they're looking to communicate. And for this, seeing more value in what an integrated report or a sustainability report can do in terms of communicating and talking to the broader stakeholder groups. So what's driving this shift? Well, let's first address the elephant in the room, because obviously regulations definitely play a big role in driving what we communicate. And I don't just mean JSE listing requirements, IFRS, or the King Code. There's BE, carbon tax, the PRI, as in the principles of responsible investment, Basel for banks and SAMREC codes for mines. I mean, there's a whole host of them that change depending on the industry that you're in. But these are not going anywhere. And if anything, I think the requirements will just get more demanding for companies. Alongside the regulatory requirements of the global reporting frameworks, the top 5 reporting frameworks to watch out for, in my opinion, are the International Integrated Reporting Framework, the GRI, the SASB standards, the Task Force on Climate-Related Financial Data, and the Carbon Disclosure Project, all of which are putting a stronger focus on disclosing ESG data or non-financial data, along with recommendations that show you what data should actually be disclosed and how to disclose it in a way that is useful to the end user or your targeted audience. South African companies are beginning to slowly take an interest in the guidelines of these frameworks, and I'll tell you why. They are competing for financial capital from a very small pool. So finances and investors that provide capital have realized that what used to provide the best returns in the past may not provide any returns in the future, and that careful consideration of environmental, social, technological, and economic factors need to be integrated into their financial analysis in order to pick out the winners from the losers, especially when investing in the long term. Companies looking to attract their attention need to make it easy for them to therefore conduct their analyses. But nothing is easy, right? And nothing is for certain. Conditions are never perfect, especially when battling junk rate status, political turbulence, and corruption, a prolonged and deepening economic recession, exponential change in technological innovations, social inequality, climate change and resultant natural disasters such as floods or fires. Then, obviously, to top it all off, a worldwide pandemic, COVID-19, just to make it all the more interesting. I think that, if anything, the pandemic has emphasized how interconnected world systems actually are. So for those looking to invest in the long term, the analytical process will have to go far beyond that of past financial performance results. Another driving force comes from societal pressures. In a world where all stakeholders are empowered to share their opinion of a company at all times, companies need to justify their social license to operate by proving that they are a force for good. Fluffy claims are no longer enough. Stakeholders need the evidence. This is crucial in upholding a good reputation amongst all the different stakeholders that contribute to the success of a company, be it customers, employees, or suppliers. You need them to trust you. So I attended an event about a year ago where this quote was shared, and it's stuck with me. I believe it sums things up really well. It says, we're in the era of naked corporations, so if you're going to succeed in this era, you'd better be rather buff. So looking at these drivers, let's discuss the key trends and themes emerging within the reporting space. Now that, generally speaking, companies have done the initial groundwork in describing their compliance with King IV and applying the recommendations of the integrated reporting framework, they're moving on from just ticking the boxes to ensure better use of their reports, using them to communicate with their stakeholders. This is a lot more effort, though, and requires mindful application along with good storytelling. So those companies that do put in the effort are a lot more creative in how they use the regulations and frameworks to communicate with their stakeholders. They seek to be much more relevant and deliberate in the information they give. So comparative data is no longer restricted to just financial data as it was in the past and as so many companies think it is. For this reason, companies are beginning to take an interest in the guidelines of the Task Force on Climate-Related Financial Data and the guidelines within the SASB standards. These help companies address their ESG issues in a language that makes sense to providers of financial capitals. And most importantly, the frameworks help to avoid reports from becoming fluffy and fruitless They give companies quantitative proof points to back up descriptive claims. Now, this next point is in the very early stages. Sorry, not this one, next one. But the 6 capitals framework, in my opinion, has been noticed as a complementary expansion of this term we commonly call ESG. Using the 6 capitals to discuss the management of environmental and social issues, risks, and impacts allows for a much more robust conversation, especially for those companies who rely heavily on social and environmental resources to generate what we call manufactured capital or intellectual capital, or for those that don't speak the language of 6 capitals, tangible and intangible assets. I do apologize if you can hear my dog snoring in the background. It's not me, I promise. I'm still here. So as a means to link the, sorry, let me go back a second here. So as a means to link the conversation with past performance and future prospects, more companies are taking a deeper interest in how they communicate their strategy. I like to think that more often than not, there is a strategic focus and foresight within a company. However, because there is no formal presentation of that strategy to refer to, the narrative around the company's strategy is inconsistent and leads to different versions and different stories of what that strategy is and what success or value means to the organization. This reflects poorly on a company's strategic focus from the perspective of an external stakeholder. So companies are paying better attention to how they describe their strategy and their purpose. And those that do it really well have made a conscious effort to address their most material sustainability issues within the organizational strategy. In this case, the investment story becomes a sustainability story, and integration happens a lot more naturally. So these are just some of the trends I've noticed while working within the space of corporate reporting. Trends that were slowly emerging before the pandemic announced itself, but that have shifted to the spotlight since then. To demonstrate what this means for the future of reporting, I thought I'd show you a recent report that came out by PwC, who conducted a scenario analysis of what the working world might look like in 2030. It's a really interesting report, and I'd highly recommend reading it when you've got the time. They came up with 4 scenarios, and so you can see they speak to sort of a socially orientated world, one that revolves around technological innovations, profit, and then companies who care. That's what they've called it. And in this particular scenario, the companies that care, where there's a greater focus on the interdependence of the environmental, social, and economic world. They've brought out, or they've looked at what reporting will look like in the future. And you'll see here on the left, they've discussed or described what that will look like. They say in 2030, real-time reporting of sustainability data is a legal requirement for all listed companies. Most unlisted entities also voluntarily produce detailed quarterly data. Here's an extract from an Imagine Organization's 2030 Sustainability Report, which allows online comparison with peer group organizations. So as you can see, what they believe will happen is that the data will be updated on a very regular basis. The data is contextualized so that even if the company increases in size, you can still compare what happens in terms of their management of environmental and social issues and what that translates into in terms of impact. So very interesting to see where this is going. So looking to the future, as I mentioned earlier, companies are going to be expected to give more of themselves, and so need to put mechanisms in place now to ensure that they don't get left out of the small pool of financial capital. just to touch on a few things I see coming our way. What will stakeholders be demanding in the future? I believe that providers of financial capital will request more ESG data as they feel the pressure to demonstrate how they are investing their funds towards a better future. I think that because of this, there'll be greater appreciation for good integrated reports and really good sustainability reports. More companies are going to voluntarily prepare and publicize reports. This is something that I've seen already happening in places like the UK and other parts of Europe and the States. Demand for information and data that is easy to consume in the digital environment. Financial data that is easy to compare and coordinate with financial data. Stronger focus on strategy, remuneration, and risk management disclosures. Esha, I think you touched on this really nicely. A financial analysis that demonstrates longevity. Analyses that demonstrate consideration and preparedness for the future. Stories that are insightful, truthful, and authentic, and a greater demand for the assurance of data. If I were to sum it all up into two parts, I'd say that the focus is on data and future orientation. What I mean by that is just discussions that show what the future looks like for you as an organization. So that's it from me. Thank you to the team at Six Capitals for providing this opportunity, and I hope for the viewers out there this was an insightful session.
Thank you, Sarah Jane. That was really fascinating for me, certainly. And I'd love to go back and look at some of those elements. What you were mentioning around the increased focus on purpose and so on is something that we certainly see in other research reports. And the real-time updating of information is something that I think investors will certainly find very useful. It's something that investors have always been looking for in terms of being able to access particularly environmental and social data on a more regular basis. I see that time has caught up with us, so we will deal with, there are no questions for Sarah Jane at this stage, but we will deal with any other questions and other discussions in the panel next week. We really hope that you will be able to join us for that. Thank you very much for joining us this morning, and we hope that you found it insightful. And if you have any other questions, please also feel free to get in touch in the course of the week ahead of next week's session. So thank you very much for your time, and we look forward to chatting again next week. Wishing everybody a lovely day.